After a week of softening trends, the market made slight movement back in the seller's direction this week. I'm Tony with Clarkson Santoro, and this is our live market update for March 17th. We do this series to keep you up to date on the latest trends that are occurring in our real estate market here in San Ramon. And using our 50 years of combined experience helping clients buy and sell homes, we use this information to help you understand how this market is changing and affecting your goals as a homeowner or someone who is looking to have a house that they'll love to call home. Oops. There we go. Starting with this week's market movements, we have 22 active homes on the market, which is down from last week's 25. The average asking price of those homes is $1,987,000, which is down from or up from last week's $1,933,000. 11 homes went pending this week, which is much more than the 3 that went pending last week. The average asking price of those homes was down from last week's $1,846,000 down to $1,658,000. And the number of sold homes that closed this week increased by 1. The average sales price increased to $1,949,000, up from $1,833,000 last week. So now that we know how the market moved this week, we can look at the broader trends that help us keep track of where the market is heading. First of all, the inventory. Last week we talked about how there was a steep increase in inventory. Now that came back down a little bit, which is the good news. That helps increase value or maintain value in homes. The difference in this week to last week is obviously our inventory is a little bit lower and much lower than your typical mid-March market here in San Ramon. We usually sit around 50 homes active on the market. The one caveat is that there are several more coming soon listings than there have been for the past several months. We've been in the single digits for coming soon listings on the MLS, and now we're in the teens. So it could mean that we'll see inventory jump back up here in the next week or two. But again, 22 homes is still very low compared to our average. So even if we do see an increase in the market, we're still at or below our average rate for San Ramon. So we increased the score for this week up to 78. Still very much favoring a seller's market with this low inventory. The turnover rate also came back up. Remember, it dropped below 100% last week, where we had finally got back to a nice steady turnover rate. It came back up above 100% this week, and we're at 109% of the average turnover, 41% increase from last week. The pending sales could slow down again here, or the turnover rate at least, with the high increase in coming soons, and also the scare in the banking industry with the Silicon Valley Bank and the other concerns growing in that area. But for now, our turnover rate is back to a very healthy rate. We're increasing that score back up to 52 this week. The over-under sales price for homes is finally back over the asking price again for the first time in, I think, since early last summer. So they have been trending. They've been trending back towards the over asking price for the past several weeks, but we're finally back to the over asking price. Not by much. We're only at $8,000 average over asking closing price, but that means that buyers and sellers are really starting to agree on where the value of the home is, and as long as we stay within that 1 to 2% range above or below asking price, that's a good sign for our market. We increased this back up to 51. Again, pretty much a neutral market at this point, as long as those prices stay within that 2% margin of error over under asking. It's pretty much a wash as far as whether or not this leans towards a buyer's or seller's market. Sales price came back up again this week. We were kind of trying to float around that 1.8 range for a while. That kind of went away at the beginning of the year. We saw a lot of the lower price homes starting to sell and all the higher price homes kind of just sitting on the market. Over the past couple of weeks, though, that's kind of shifted back to where the lower price homes are still selling quickly, but we're also seeing some of the higher priced 2 million-ish range homes sell at a more normal rate as well. So our average sales price is kind of trickling back up. We're still well below the high of last year. I think we started at the beginning of last year averaging 1.8 or 1.9. So we're below the start of last year, but we're back to a healthy number and above 2001 prices. We're rating this score at 60. Again, not strongly favoring sellers, but as prices continue to trend up, that's going to work in a seller's favor as homeowners just increase the value of their homes. In the tech industry, we thought that perhaps with the tumultuous nature of the Silicon Valley Bank collapse and the bank run there, that the tech market would also kind of suffer a little bit, but that has not been the case. Tech equities came up again this week, where they had been kind of floating at a normal rate for the past few weeks. They increased by a few points over the past week. Again, I know we say this a lot, but as the tech industry goes, so goes our housing market here in the Tri-Valley and San Ramon, even more specifically. We get a lot of home buyers that are looking at San Ramon because of our highly rated schools, but our relative affordability compared to the Silicon Valley counterparts. The housing market there is always much higher than it is here. So with this Triple Q in a good state again this week, this is another thing that is leaning in a seller's favor. Or increased into the seller side. It's still kind of lower on the buyer side because it is lower than it was last year. The Triple Q fund is lower than it was last year, but it's moving towards sellers' appreciation. And finally, interest rates. Now, we had some good news this week in interest rates. We had been trending up by about 20-ish basis points each week for the past 6 weeks. We finally had it dip back down a tiny bit. We're down 13 points from last week. We were at 6.73 for a national average of a 30-year fixed mortgage. We're now back down to 6.6 for that same 30-year mortgage fixed rate. Anything above 6% still feels high compared to if you look at the past several years since 2012, which was really the start of the rebuild after the 2008 crash. We've been pretty consistent in the high 3s to low 5s percentage. And then obviously we dipped significantly in the past couple of years. And now that we're back above 6%, anything over 6% is going to feel high, although in the grand scheme of things, 6% is probably closer to average. Once we get below 6%, I think buyers will have a lot more confidence in their higher desire to move into a new home. So we increased the market or the indicator score again to 32. It was down to 30 last week. So not a huge increase, but with that interest rate dropping a little bit, it is moving a little more towards a buyer's or a seller's market. So overall, last week the market kind of softened a little bit, moved towards a buyer's trending towards a buyer's a little bit last week, but it moved back in the seller's direction again this week. Inventory dropping and the turnover rate increasing despite the high interest rates and the fear and concern with the Silicon Valley Bank situation, bodes well for this current spring market. It does feel like we'll probably see the spring market increase in value a little bit moving forward. The thing to watch for will be, of course, if interest rates climb back up, or if those coming soon listings start to appear on the market and not go pending quickly. That will hurt the spring market if that does occur, but only time will tell. So we have increased the overall market score to 52 this week, which was down below the halfway mark last week. Still, 52 is very much a neutral market. If you're a seller, you need to really be aware of how much you're asking for your house. Do everything you can to make it stand out from the competition and be a home that buyers will want to make their home and love calling home. For buyers, you're seeing it already. I'm working with several buyers who have lost to multiple offers already. So I think you're going to have to be prepared to be aggressive with your offers on houses. But again, we're pretty neutral in this market currently. I hope this indicator or this market update helped you understand how the market is affecting your options. Please comment below or reach out directly if you have any questions about how this market is affecting you and how you can use it to either sell or buy your home. Thanks again for joining me on this live market update, and I'll see you next week with a new update.